Today, I'm going to be showing you with charts and data why we could realistically expect gold to go to $10,000 an ounce in this bull market. So let's get right into it. Okay, so here we're looking at the gold price going back to the early 1970s. So on the bottom here, you have the date, and then on the right column here, you have the price of an ounce of gold in US dollars. Now, I don't want to go all the way back to 1971 because in 1971, the price of gold was $35 an ounce. However, that was fixed. That was price controlled. So that doesn't really count when looking at the performance of gold in the coming years. So let's start at approximately March of 1973 when gold was at $80 an ounce. It doubled in about a year. The price doubled in about a year, but then they were raising interest rates and they were trying to fight inflation, and gold fell by quite a bit. And then it didn't get like a sustained double from $80 an ounce until 1977. So we have late 1977, $80 an ounce, 1973. So we're looking at a sustained double in about 4 years. Now, look what it did after we already had a double. We go from here all the way up here. But keep in mind that this chart we're seeing in the 1970s here is only updating every 2 months. So it's plotting one dot every 2 months. So there was a lot of price action in between each one of these dots here. So according to a chart I'm looking at, the actual high in 1980 was $843. Now that might have been like the daily close because I think it hit 850 intraday. But anyway, so the top of this chart only shows about $700 an ounce. So it actually got $150 an ounce higher than that because this chart is only showing every 2 months. So what happened from $80 an ounce? So during the 1970s, if you forget about the price controlled $35 an ounce price and go to like what the market was after a couple of years, well, you had a 10x from there. What about today's bull markets? On this graph, it shows a low of 1081, but this is only every 2 months. The actual low was something like 1050 in late 2015. So what would happen if we more than 10x'd from 1050? Well, you're looking at like $10,500 an ounce. And so far, we've had about a double from there. So perhaps you could expect another 5 times gain. Now, this isn't investment advice, and always do your own research, but I'm just talking about what could possibly happen. Okay, now let's look at another bull market. Now, here we're looking at the 30-year chart, and the bull market in 2001 started approximately here. Now, this is a 1 month chart, so although the price says it was $263 an ounce, it did get a little bit lower than that. It was a little above $250 an ounce. Let's see how long it took to double from the bottom. So let's see where we get to $500 an ounce. Okay, we're getting close. We're getting close. Okay, there we are. December 2005 from 2001. So it took about 4 years to get a double. Now, where we're at today, from December 2015, we got a double at approximately 5 years. But we're not much higher than we were then. Like it consolidated for a while, and now we're still at approximately a double from the low. But let's go back here. Look what the price action did after it doubled. Look how much higher it went. A double looked really good at that point in 2005. However, if you look at the chart going all the way to 2011, it ran so much further. So now this is a monthly chart, so it doesn't show what the actual high was. It shows it as 1778, but let me take a look to see what the high was that year. So I'm looking at this chart, 2011. The high was 1896. Let's just call it $1,900 an ounce. So I'm just doing some calculations quickly on my other computer. So in the bull market of 2001 to 2011, we had a low price of $256 and a high price of $1,896. So that is a 738% increase. Now let's do a calculation to see what a 738% increase is from 1050, where this bull market started. 1050 times 7.38. So we're looking at $7,750 an ounce. Now, not quite $10,000, admittedly, but it's getting pretty darn close. Okay, so checking out the price action of gold over the last many years gives us one idea of where gold could go in this bull market, but let's look at it in another way. Let's look at the Dow to gold ratio over the last 100 years. So right now, we're sitting at about 18. So that means it would take about 18 ounces of gold to buy 1 unit of the Dow today. Now, as you can see, it's not an all-time high, but it's definitely way above average when looking at this chart that goes back over 100 years. So average might be about 6, a Dow gold ratio of 6 or so. And right now, we're at about 18. So let's take a look at what the Dow gold ratio has done in these various bull markets in gold. 2011, you're looking at a Dow gold ratio uh, dropping to as low as about 6. And 1980, almost down to 1. And then 1930s, it got down below 2. So right now, we're at 18. It has a history of going down to 2, down to 1, and down to 6. So let's say it gets down to 3, and the price of the Dow stays the same. That means we're getting a 6 times gain from where we're at today. And today, we're sitting at almost 2,100 gold. So 6x from there, you're looking at over $12,000 an ounce. So the previous gold bull markets have lasted about a decade. And in those, we got more than 10x gains in one and about 7.5 times gains in another. And we started this one at about $1,050 an ounce. So if it goes up 9 times from there, you're looking at $10,000 an ounce gold. Is that going to happen? Now, I don't know, but I certainly think it's a possibility, if not a probability. Now, this is just my guess, looking at charts and data and comparing it to past bull markets. Now, the previous bull markets have lasted for about a decade, and we're already 8 years into this one. Since we're 8 years in and we've only gotten a double, I tend to doubt that this one will only last for a couple more years. So I think we have quite a ways to go from here, but we'll see how it plays out. It's anyone's guess. I'm just trying to look at data to get an idea of where gold might go in the future. Anyway, next, check out this playlist of videos that's going to make you a better mining stock investor.